let's have a look at gold miners, because something very critical is happening. First off, read this disclaimer carefully, and do your good deed of the day by liking and subscribing. First, let's get the big picture. The megatrends are seeing some rotation, and if we go to the money section, you can see that cryptos are, significantly outperforming, what we can call real money, gold and silver. There are various leveraged ways to invest in the gold miners. You have the bullish one, plus 2x gold miners. That one is up 171-ish from the 52-week low. And then you do have the bearish one, which is up 33%. Okay, so you have the GDX is the underlying, that's the ETF to analyze when, determining if you are going to get into the NUGT, which is 2 times bullish, or dust, which is 2 times bearish. If we look here at the seasonality of the gold miners, you do see that January is one of the strongest months. The only month that is stronger is December. Hence, December, January, it tends to be a strong period. If we here look at the charts, December, January usually were strong. You can see that, this time, it's been quite mediocre. Hence, you could make the case that we sort of are due that seasonal strength, that maybe for various reasons it's been delayed. If we look at where price is at this very moment, you can see that we're testing the resistance way back here. Also this resistance level. And we have now, because of this recent pullback, formed a head and shoulders pattern. Shoulder, head, and shoulder. So this is a pretty critical time here for the gold miners, because if we do see further deterioration, then we could actually see a quite substantial sell-off. So this is a very critical time here for the bulls. They need to show up. There are two primary ways to view a head and shoulders pattern. So let's look at the daily data points to bring the point home. The head and shoulders is a classical bearish pattern, but the reason why it can trigger a reversal to the bullish side, that's because especially the shoulders, and to some extent also the head, they can form horizontal support levels. So if we draw the line here, you can see that there's many data points that touch. Also around here as well, you have many levels that could be interpreted as support. And that is something that bulls can take advantage of to neutralize this pattern, because this is something that everyone can see, the algorithms see it, and it skews the market participants in a more bearish direction for sure. Because things were going pretty well. We did have this rounding bottom-ish pattern, which is a very classical bullish pattern. We did have that pullback. The thing is that it is very much possible that we are in the process of forming, what is called a cup and handle pattern. Look at that. So it's like you have that cup, and then you form a handle. You could make the case that this is like a handle, but ideally, when you form a handle, you do not want to have a head and shoulders pattern. So this left shoulder here, and this a bit too clear right shoulder, it complicates things. If we look here at gold, with gold we do not have the head and shoulders pattern. Here we do have a much clearer case of a cup and handle. Very clear cup and a relatively clear handle formation. Hence, I do think that the bulls, they have a decent opportunity to pull this off. If you look at the RSI, we are basically in the neutral zone. Looking here at the AD line, which shows us whether buyers or sellers are dominating. Even though a price has pulled back, we do not have an ominous signal here. If we go here, look at the correlation, 78% with the S&P 500. Looking here at daily data points, RSI here as well in the neutral zone. Pretty clear that the blue 100-day moving average has become a solid resistance level, also the 20-day. So it is a bit of a messy situation at the moment. So let's now look at the correlation between GDX and the leveraged alternatives. So you have NUGT if you are feeling bullish. Here we can see that there's almost no correlation long term. That's an issue. If you look here at the daily data points, then we do have a 98% positive correlation. Hence, for shorter term trading, it does work, but longer term, as we see here with the weeklies, there's massive divergence. Let's look at the bearish one, the dust. So you have the dust here, you can see minus 86% negative correlation. Actually been working a bit better longer term. Shorter time frame, it actually is minus 76. We would actually ideally see a much higher negative correlation. Hence, there is some significant divergence. So that is something to be aware of. Both NUGT and dust, they do work, but there are some issues, as we saw. Okay, if we do put the evidence together, where should we be? Should we be playing this bullishly or bearishly? I do think that, given that you could make the case that the seasonality, the usual strength we see in December and January, it might have been pushed a bit further into the year, and hence we are kind of due that seasonal strength. One of the things that have been drawing attention away from gold, that's certainly been Bitcoin, which has seen massive surge, but there is no weakness in Bitcoin. If you look at Ethereum as an example, there is more strength there. But you see that here you have these super bullish candlesticks. Here it is much more rocky. You see the wicks here are very, very tall and very, very deep. They go way up and way down. So there is some issues here with cryptos that could benefit gold. Because in the same way that you analyze the gold miners to figure out what to do with NUGT and dust, it makes sense to look at the GLD to figure out what you are going to do with gold miners. And the GLD chart here looks better. Right now, as you see, we are testing support. Here, you can see the price line. This is way back here to 2011 and 2012, the prior tops. Hence, and given, that we do have this nice cup and handle-ish pattern, I do think that I would lean towards the bullish direction. The key thing for the bulls is that they need to show up now, because they can't dilly-dally. So as we saw, there is especially a very problematic pattern here on the gold miners. We do have that head and shoulders pattern. Hence, what we are faced with right here and right now is a huge epic time for gold. Gold is the mother of all finance. Hence, what happens to this metal is a very, very big deal. There's massive money printing all over the world. There's so many reasons why gold should go up. The problem is that if there are many reasons why it should go up and it doesn't go up, then that can be interpreted quite bearishly. So it is quite do or die now for the bulls. However, I would give the bulls the benefit of the doubt in this situation. So bulls, get to work. Because literally the entire financial world is watching this right now.